Welcome to the Organized Expat, brought to you by Tytle, the platform for expat taxes. Hi listeners, welcome back to the show. Today we're going to talk about Portugal, and I'm doing that together with Laurens, as always.
Hi everyone.
Laurens is the expat tax expert, and so today is going to be Portugal. We're going to give an overview of Portugal, what you need to know about taxes in Portugal, and especially what you need to know as an expat moving to Portugal, and what the tax burden is, what the various relevant, significant aspects of the Portuguese tax system are. So let's get started.
Right. Yeah. I think we usually look at the income tax rates first.
Mm-hmm.
So what really stands out for Portugal is the amount of tax brackets that they have.
Mm-hmm.
It's around 7 or 8 tax brackets. So that means that the higher your income, you will pay another tax rate on that.
So 7 tax brackets. Which is so, and that starts at.
It starts at 13%, goes all the way up to 48%.
Mm-hmm.
But from around 50,000 euros onwards, you already pay 45% on your taxes. So it's relatively high in Europe.
But it also means that it's very precise if you have so many brackets. So for that specific income, you're paying that specific rate. So
just for the income that falls between the starting point and the end point of that tax bracket, indeed. But that's true. It's precise. It's also a bit more work probably to compute it.
Yeah. It's more complicated than we see in many other countries.
Exactly.
I think Italy is the easiest one with 3.
Yeah, I mean, Italy has, the easiest is probably some country like Bulgaria has flat tax.
Yeah, exactly.
They have around 10%, but in Italy you have 3 tax brackets. And that's
Yeah, okay, so here we have 7. And what about social security?
Yeah, that's interesting because people often forget that social security is also due.
Mm-hmm.
So let's say if you most listeners will come from abroad to Portugal, so sometimes they pay social security at home. If you pay your social security in Portugal, you'll have to account with 11% as your employee contribution. So the employer also contributes to social security, and you as the employee also need to contribute 11%.
Okay, so that's on top of that, and if it runs from 13 to 48 or slightly under 50%, which is I think quite average in Europe, but then also social security on top of that. It is quite a lot that you're paying.
Yeah, I would say it's on the higher side in Europe. It depends, of course, a bit because the wages are lower on average in Portugal. So it's easier to get into a higher tax bracket in Portugal than it is in other countries. But in other countries, the wages are also relatively higher.
Okay.
So if you say you will on 2,000 or 3,000 per month, you'll probably pay a bit more in tax in Portugal than if you lived up north.
Okay. Yeah. So that may equal, or that may be a counterbalance. So NHR, I think that's probably one of the most searched Google terms when it comes to tax in Portugal. So why is that so important? Could you tell in a nutshell what NHR is, or
what NHR was, maybe?
Yeah, exactly.
Yeah, of course. So what NHR was, because it ended 1st of January 2024. There is a new NHR program that we'll get to talk about later. Maybe we'll even do another podcast about it. But what NHR did is if you fell under a list of high value-adding professions, there was a list of software engineers, architects, etc. You would pay a flat tax of 20% on your income, employment income or self-employment income. And then, of course, the social security.
And NHR stands for Non-Habitual Resident.
Stands for Non-Habitual Resident. It was around the financial crisis in 2008. It was set up. So you have that advantage for 20% flat tax, and also all your foreign-sourced income, so rental income from whatever, from real estate located abroad, dividends, interest, royalties from abroad. that was exempt in Portugal. So that meant that if you paid, basically, if you already paid taxes on it abroad, you don't have to pay it in Portugal again. In a nutshell, I mean, it has some nuance, so a bit more nuance to it. What is important, you always had to report it in Portugal.
Yeah.
So you might not always pay tax on those on the foreign income, but you always had to report it.
Still had to report it.
But yeah, what it also did is that a lot of expats came to Portugal, didn't necessarily contribute that much in taxes, did drive up the housing prices.
Yeah.
So Portuguese people were not that happy about it, because we also saw that Portuguese income tax rates are quite high, NHR tax rates are quite low.
Yeah.
So that created a bit of an imbalance.
Yeah, they had a lot of firepower with all the money, and then they could outcompete the Portuguese, the market for housing.
So that's why it was discontinued, and now they have another NHR. It's called NHR 2.0. But that is for people who work in academia and researchers, etc. It's not for everyone. So it's basically, you can say that NHR is done.
Yeah. And by the way, non-habitual means actually that you're new to Portugal.
Yes, exactly. So there was a criterion that you could not have been a tax resident of Portugal in the 5 years before coming to Portugal.
Okay.
So yeah, you even, I mean, it also means that if you're from Portugal, you go abroad for 7 years, for example, you come back,
then it applies to you.
Yeah, and a few football players were lured back into Portugal like that as well, also making use of NHR.
Yeah, okay. But we're talking a lot about it, but it doesn't exist anymore, unfortunately, or hardly exists, because it's only for people in academia, researchers, that it still exists. So that's NHR, was NHR. Other things that are relevant, perhaps because when people approach us, we often see that they're struggling with the first steps in Portugal. So what do you do first? What's the basics?
Yeah. I mean, the first step is getting your tax number in Portugal, your NIF.
Yeah. Which is extremely important in Portugal. So we're based in Portugal. We know firsthand how extremely important your tax number is, and probably in every country your tax number is important, but here they take it to the next level. So even if you do grocery shopping, they ask you, if you just buy, let's say, an apple, it doesn't really matter. They ask you whether you would like to have your NIF, so your número de identificação fiscal, on your receipt, and it's the reason why we have long queues here in Portugal.
Exactly.
Yeah.
I mean, you will also find long queues when you apply for your NIF, if you do it in person. There are multiple ways to do it. You can have a tax representative do it for you, like a third party. We could assist with it as well, and to get your NIF on your behalf. And at the end of last year, we saw that a lot when NHR was ending. So a lot of people wanted to just get NHR before the deadline, but they needed a NIF. And if you live in, for example, the Netherlands, then it could take up to 3 weeks before your NIF and your password were sent to your address in the Netherlands. So then lots of people prefer to do it via us. And I think for the in-person way of applying for your NIF, maybe you're the one that can explain a bit more, because you did it yourself.
Right? That's quite rough. So if you really want to get to know Portugal and Portuguese bureaucracy, that's the perfect way to do it, because you have to go to a loja de cidadão, or so that's basically one of those offices where you can go for financial matters or for municipal matters, and it takes ages to get an appointment. And when you get your appointment and you're lucky enough that it was registered, your appointment, and you're standing in line for hours, then in the end you will get your tax number, but it's a rough experience, but also a very Portuguese experience, so maybe it's worth the while. I think when we're talking about NIF, it's also important to mention that you can do it. So you have to link your NIF to an address.
Yes.
And that could either be an address abroad or an address in Portugal.
Yes, exactly. Yeah. And more the practical relevance of it is that if your NIF is on a Portuguese address, then the Portuguese tax authorities will flag you as a Portuguese tax resident.
Yeah.
So I mean, reasons why your NIF would still be on a foreign address is, for example, if you just you get an apartment in Lisbon, but you still spend 11 months a year in Spain or wherever, and you're still a tax resident there, but you just need a NIF to buy an apartment in Lisbon.
Yeah.
And that could be a reason why your NIF is then not on that apartment in Lisbon, but it's
Yeah.
back home.
Yeah.
And also when people are transitioning to Portugal and like moving to Portugal, they could already have bought a property, but the NIF is still on a foreign address in the first month. Most of the times when people move to Portugal, they register, and they rent an apartment, they buy something, and they put their NIF directly on that address, and then they're also directly flagged as Portuguese tax
So
residents.
then you're in for a nice surprise if
Yeah.
if you're not yet a resident, but you're still a resident in the US, for example,
Yeah.
that you link it to a Portuguese address, then the Portuguese tax authorities will assume that you're a Portuguese tax resident.
Yeah, exactly. And I mean, if let's say if you accidentally have your NIF on a Portuguese address already, but you haven't yet deregistered at home, that could also create some overlapping problems. Let's say if you are already a tax resident in June in Portugal, but you deregister from Germany in September, then there's a period of maybe double residency, and you have to maybe prove that you were actually during that period already a resident of Portugal or of Germany, which creates some extra administrative burden, let's say.
So you have to be, let's say, careful when you do that. You really have to know when you want to go from one country to another, in this case Portugal, and you shouldn't register or link your NIF number to a Portuguese address unless you're completely sure that you want to become a Portuguese tax resident from that moment on.
I mean, there are of course ways to prove that you were not actually
so you can repair it.
Yet. You can repair it, but ideally speaking, you want to deregister in Germany, Netherlands, wherever, on day X, and on that day also link your NIF to a Portuguese address because that's just the easiest.
So that it's seamless.
Yeah, exactly. And it's also relevant for filing tax returns, of course, because if you move to Portugal, if you link that NIF to a Portuguese address, let's say in September of that year, then from September onwards, you're seen as a tax resident.
Yeah.
So any income earned after September is taxable in Portugal, and you will also be expected to report that in Portugal. That also means that if you didn't have any income at all in Portugal, and I have to say, if you didn't have any income at all worldwide, you don't have to file a tax return. But the question is, of course, did you actually not have any income? Because a lot of people think, okay, I didn't earn anything in Portugal, but if you had rental income in
New York
or New York, then you still need to report that in Portugal because it's your worldwide income. And then, of course, you have tax treaties, what we also always do at Tytle, where you can make sure that you don't pay taxes twice on that because you apply for a credit or an exemption.
Maybe that's good to tell listeners that we always make sure that tax treaties, so people often come to us because they go to another country, they need tax assistance there, they need an expert view, they need to talk to an expert for advice. But we make sure that we connect you with our best experts. But we also make sure that if there is any cross-border situation or problem, that tax treaties are taken into account so that the whole experience is seamless in that regard. That you're not paying taxes twice, or and you also avoid let's say miscommunications between the tax advisor at home and the tax advisor in the country of destination. We make sure that it's all under one roof. So okay. Self-employed persons, freelancers in Portugal, what can we tell about that?
Yeah, right. So if you look at the tax rates, they're quite similar to the to employed people, but there are some more deductions. Also, if you are, let's say, if you are starting freelancer in Portugal, the first 3 years you have a certain like a special deduction, let's say, so you pay less taxes. For the rest, it's fairly similar. And yeah, if you want to start becoming self-employed in Portugal, you can indeed do that in person or online again. It's just important that you register, that
Yeah.
you don't forget to do that. So yeah, there are a bunch of cases that we can think of where that
Mm-hmm.
goes wrong. So let's say, I think I was using Germany as an example all the time. If you come from Germany, you're already a freelancer in Germany. You
Mm-hmm.
move to Portugal. What we see go technically wrong is that people keep using that freelancing activity in Germany
Mm-hmm.
because, for example, the clients are
Yeah.
based in Germany. They don't register in Portugal. They think
Yeah.
they have to pay those taxes in Germany, but actually, if you're living and working in Portugal,
Mm-hmm.
physically present in Portugal, there
Yeah.
are some exceptions. You need to report and pay those taxes in Portugal.
Yeah.
And so yeah, that's one of the a bunch of examples that we often see go wrong.
Yeah.
Or just if people go to Portugal, already start working and register at Finances later.
Mm-hmm.
Because then, yeah, they've already started working, they've already started invoicing, but there's
Yeah.
not yet an activity registered. So it's
Okay.
important to do that in time. And of course, this can be repaired as well.
Yeah. So you first have to register, and that's what was the word again? I think it's yeah, I have it here, the inicio de actividad. That's
Exactly, yeah, like so,
important.
the start of your
Start of
activity.
activities. That's
Yes.
what you do first. And after that, you have the famous recibos verdes, the
Mm-hmm.
green receipts. And I think they communicate automatically with the tax authorities, or at least it's a system which makes sure that everything you do and everything you invoice,
Yes.
it will also get into the tax authorities system.
Yeah,
So,
exactly.
yeah.
It's just a requirement. I mean, Portugal has a lot of requirements that also for companies when they invoice things, they always need to invoice
Yeah.
they need to place their invoices in a system. So
Yeah.
there are quite some invoicing requirements in Portugal.
Yeah.
Um, but yeah, that's true. And
And maybe one other thing that, so you already mentioned coming from Germany and you're self-employed there, a freelancer there. We also see a lot of questions about, and maybe we should do a separate podcast about that, but LLCs, people with LLCs in the US, that's
yes,
also,
yeah, it's a very popular route. But recently, I mean, last year there has been some discussion of whether it's the most sustainable route.
mhm.
Because and this is often when you have a type of entity, or in this case an LLC, that it's an American thing, so you cannot be sure that the Portuguese tax authorities look at it the same way as the American tax authorities look at it.
Mm-hmm.
So in the US and the LLC, it's like complex word, a pass-through entity, so you will see it in your personal income taxes.
Yeah.
But there are high
Yeah,
chances.
that's called pass-through or transparent, I think.
Yeah,
The tax
exactly.
transparent. So,
Exactly, yeah. And then there are chances that the Portuguese authorities see it as a non-transparent entity, so really as a company,
yeah.
as a separate legal
Yeah.
entity. So in that case, if the Portuguese authorities think X and the American authorities think
Why?
Y,
Yeah.
exactly,
Yeah.
pun intended,
Yeah.
yeah, then you can have a qualification conflict
Yeah.
between those two. And yeah, I mean, there are some cases recently also about the permanent establishment risk, but we can talk about that in
Yeah.
another podcast where, yeah, there are some warnings against using the US
Yeah.
LLC in Portugal.
Yeah. So it's good to be aware of that. And of course, we can provide you with advice, but first of all, you need to be aware of the fact that it's something to take into consideration.
Yeah.
So last two things that we typically discuss when we're talking about a country is taxes on real estate and
Yes.
inheritance. So let's quickly go through real estate. It's not a lot we can say about it. So what's important to know?
Yeah, I think most listeners will be interested in the rental income.
Yeah.
It's 28%. And the 28% is a number you see more often in Portugal. For example, capital gains are all 28%. But
so if you rent out an apartment in Portugal, then you're paying 28% on the rental income you get out of that apartment.
Exactly. And even if you have property abroad, then in principle, you need to report it in Portugal as well. And then let's say it's 28% in taxes. And if you only have to pay 24% abroad, for example, you can credit the 24% against the 28% in Portugal, but it means that you,
still
technically speaking, that you pay 4% to Portugal as well.
Okay.
And that is because that is a credit system. It depends a little bit on which country, because for some countries there's a credit, with some other countries there's an exemption. That means that Portugal just doesn't tax it at all.
Yeah.
But that's also why, and this is just an illustration of why NHR was so beneficial, because NHR always exempted foreign source income. So you never had to worry about,
is it lower? And if it's lower, then do I have to pay the difference still to match the Portuguese rate?
Yeah, that's true.
Okay. And there's also, I think, a percentage of the value of your house that you're
it's between 0.3 and 0.8%.
Yeah.
That's indeed on the value of your house.
And then there is an additional value if it's over a certain amount. So if it's a certain value, then you pay some additional
600,000.
600,000.
And that's for couples, 1.2 million. So that's, let's say, for nice houses.
Yeah,
that's an extra. An extra
tax on nice houses. Yeah, that's it makes sense in a country like Portugal, right? So they have some ideas about. Let's say it's. I think it has a socialist tradition. Portugal. It is.
Definitely, and it's also why I was reading an article about it the other day, where the crime rates are quite low in Portugal. It's the third safest country in the world, and they were arguing it's because of the socialist tradition, because there are not a lot of differences between people. So I mean, that makes sense, I think.
Less incentive to become a criminal. Okay, could be. Inheritance tax. That's good news if you look at Portugal.
Good news as in they don't, strictly speaking, have inheritance tax. If you're related in a direct line, or if you're inheriting from your spouse, you pay nothing. But if you're not related in a direct line, so you can think about siblings, nieces, nephews, friends, your neighbor, etc., you pay a 10% stamp duty. So then you still pay something. But I mean, this also depends on a lot of other factors. So this would assume that the person who dies, let's say, is located or was located in Portugal. Yeah,
exactly. And that's important to know. So the whole inheritance tax system typically follows the person, the deceased, the person who dies, and not so much the person who receives. So
exactly,
the heir. So that's, I think, a good thing or important to point out. Not that if you move to Portugal and you receive an inheritance from, let's say, Germany or another country, it doesn't mean that you can simply apply the Portuguese rules. You will probably still be subject to the German rules in this case, or the US rules, but it applies to people who lived in Portugal when they died, and sometimes it only applies to them 10 years after they left, or 5 or 10 years after they left the previous country, because the previous country often follows a tax resident for...
Exactly, could be 10 years.
Yeah, it could be 10 years.
Just make sure indeed that someone doesn't smartly move to a zero inheritance tax country. Because it would make planning very easy. And that's why you have these reference periods. It's often around 10 years if countries have that.
Otherwise,
5 or 10 years.
People would rush the dying people to Portugal to that would not be let's say, good incentive. So I think that was it for Portugal, and we'll be doing another country special soon. But for now, this was Portugal. If you have any questions or remarks, feel free to reach out to us, and hope to see you next time.